that 2008, I think, was the Great Reset. The one that people keep expecting happened. Well, most people tend to err towards well, it's all going to blow up. I'm like, show me how. If you can debase a currency, a global reserve currency, how's the assets going to collapse? You can't. It's like the Venezuelan stock market goes a lot in Bolivar terms. In dollar terms, it goes down.
Right.
That's debasement. So I'm like, I don't think that is the outcome. What I actually think of the outcome is, remember that magic formula, GDP growth plus productivity growth plus debt growth. Right, debt growth has stopped. It's just servicing of old debts. Population growth, we know, is negative out for 30 years. And what is the answer? AI and robots. They're infinite humans.
After several months of stubbornly maintaining a hawkish stance despite indications that the economy was cooling too fast, Fed Chair Jerome Powell has finally provided the strongest dovish signal since the U.S. Federal Reserve started hiking rates in 2022. While speaking at the Fed's annual Jackson Hole Symposium in Wyoming on Friday, Powell signaled that the central bank plans to begin cutting the historically high interest rates in September. "The time has come for policy to adjust," Powell said on Friday. "The direction of travel is clear, and the timing and pace of rate cuts will depend on incoming data, the evolving outlook, and the balance of risks." Though Powell did not indicate how much the Fed would lower its key rate next month, a majority of forecasters are expecting a quarter-point reduction in September, with at least one more before the year ends. During his speech, Powell noted that the Fed's task of lowering inflation is not complete, but it has made a good deal of progress. The Fed chair is confident that inflation is now on a sustainable path back to the Fed's 2% target. He also acknowledged the state of the labor market as an incentive for September's rate cuts. He said, "The upside risks to inflation have diminished, and the downside risks to employment have increased. It seems unlikely that the labor market will be a source of elevated inflation pressures anytime soon. We do not seek or welcome further cooling in labor market conditions." This is a moment several analysts and prominent investors have consistently predicted over the past few months, despite the Fed's insistence that it would hold rates higher for longer until it achieves its 2% inflation target. Perhaps no one has been as consistent and accurate at predicting this moment as Real Vision founder and CEO Raoul Powell, who has spent a large part of the year educating investors about the everything code and why the Fed and other central banks are 100% certain to resume rate cuts and quantitative easing. The rate cuts, QE, more cowbell, and the impact on asset prices, especially cryptocurrencies, make up Raoul Powell's everything code thesis, which he discusses in a recent discussion with Mark Moss. As we bring you clips from the interview, please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks, and enjoy the video.
What's weird about the everything code, and I'll explain what it is. What's weird is it makes everything so simple.
Too simple.
That most people think, well, this can't be possible.
Yeah.
We kind of knew it in Bitcoin world because we could see a cycle forming. And we've been following this cycle kind of dumbly, like, well, it's kind of maybe just the halving cycle. We don't really know. And then I started digging in and realized that the business cycle was perfect. So the business cycle, I used the ISM survey, and it was a perfect cycle. I'm like, that's weird. Because if you remember, go back prior to 2008, we'd have these long periods of no recession, short periods, and it was variable. But suddenly it's like a metronome, as you say. I'm like, what's that all about? And eventually it led me to realize that 2008, I think, was the Great Reset. The one that people keep expecting happened. What they did is they basically they told everybody they could forego paying interest on all their debts, which was zero interest rates. And then they tried the new trick of printing money via quantitative easing. Now, what that did is allow every single major government in the world to refinance all of their debts on this 3 to 5 year sector. And so they all did it. And what it did was force the business cycle into this 4-year cycle. And then all the asset prices are all correlated. Whether it's tech, whether it's Bitcoin, whether it's the economy itself, it's all driven by the same cycle, which happens to be the presidential election cycle, which happens to be the Bitcoin halving cycle. It's all the same thing. And so when you understand that, it makes the game a lot easier. Now, this is not going to last forever, but for the period of time that we've got, it seems to be playing out perfectly. And you can break these cycles down to 4 phases, which I call the seasons. So we have, call it crypto or macro winter. Well, that was 2022. That was 2018. That was 2014. That is 4 years. The next part of that is spring, when nobody quite believes that something is changing, but prices start moving higher. You know, Bitcoin had a great year in 2023 against most people's expectations, because spring is the time the shoots come up. Then you start transitioning into summer, which is this year, which happens to be the election year, which is when really the debt starts getting refinanced and they have to start using liquidity to finance it, because there's not enough GDP growth to pay for the interest on the debts. And so they keep rolling forwards these debts and they keep monetizing the interest payments, which is this debasement of currency that happens at about, on a globalized level, 8% a year. They're debasing currency. And then next year will be macro fall, and then eventually the cycle tops out and we repeat it again because it's based on the debt refi cycle.
Right.
That this debasement of currency of 8%, there's 2 ways of looking at it. You can say, rightly so, we're being robbed of our future wealth because your future self is getting poorer because you can afford less assets with your income, because income doesn't go up, the assets do because of the debasement. Or the other way is you can say, I'm paying an 8% put option fee on the entire system not breaking, because that's also what they're doing. Because they need to refinance the debt. They need to not let asset prices go too far down. So we can talk about that, but it's another way of looking at it. And you're like, would you pay 8% a year to have the entire system not break? Maybe.
According to Powell, central banks have found the magic formula to keep the global economy from the inevitable collapse many have been predicting for years. Though this comes at a cost for all, the debasement of fiat currencies, Powell believes it's a small price to pay to prevent the collapse of the global economy. According to the renowned macro analyst, the only way out is to invest in assets that are sure to outperform this periodic debasement of the denominator. In this regard, nothing comes close to cryptocurrencies, especially top cryptocurrencies like Bitcoin, Ethereum, and Solana. This is why Powell is predicting at least a 400% increase in the overall cryptocurrency market cap by 2025, from just above $2 trillion today to $10 to $15 trillion at the peak of the bull market next year. For the rest of the global economy, Powell says central banks will be able to continue to coast along by printing periodically until a more permanent solution surfaces. Here are more clips from his discussion with Moss.
If you think about an aging population, if you think about your parents, the older they get, the less they spend. So aging populations tend to have lower trend rates of GDP. They all do. It's happened, observable everywhere, because old populations spend less. They also tend to not know how long they're going to live for after they retire. So when my dad retired, his spending must have fallen 60 or 70%, because he's like, well, I've got this much money, I don't know how I'm going to live for, is my wife going to be taken care of? And so they change their habits. And so that drags down GDP growth, as does debt. And so it keeps compounding this whole thing. Is right now, for example, interest rates are at 5.5%, but trend rate of GDP over the last 5-6 years is about 1.75%. So you've got this big gap and you need to get interest rates down so you can refi them, but all the time GDP keeps falling over time. And you can forecast it into the future. It's just the births, deaths, and it gives you 30 years of understanding. And it's just telling us, unless something dramatic changes, which is technology, we're just going to keep dragging down GDP forever. And we're seeing it worse. Older populations, Japan, China, most of Europe, they're older than the US because they had less immigration. What you find is their GDP keeps shrinking. Australia, on the other hand, has a high immigration rate, as has Canada, and they've tended to do better because of the immigration rate. Because really, GDP growth is driven by population growth, productivity growth, and debt growth. Well, most people tend to err towards well, it's all going to blow up. I'm like, show me how. If you can debase a currency, a global reserve currency, how's the assets going to collapse? You can't. It's like the Venezuelan stock market goes a lot in Bolivar terms. In dollar terms, it goes down.
Right.
That's debasement. So I'm like, I don't think that is the outcome. What I actually think of the outcome is, remember that magic formula, GDP growth plus productivity growth plus debt growth. Right, debt growth is stopped. It's just servicing of old debts. Population growth, we know, is negative out for 30 years. And what is the answer? AI and robots. They're infinite humans. And productivity, what is productivity? Productivity really is how much output per kilojoule of energy. Now, think of that as electricity costs. If you then think about, and a lot of people are like, the Europeans, they're nuts, look what they're doing with this green energy, they're wasting money. They're not. Their entire job is to lower the cost of electricity, because that is the only way they can pick up GDP, because it creates the multiplier to productivity. They don't have the tech industry in the same way, but they have, them and China are the big pushers of renewables. So the cost of renewables has been collapsing over time. It's down 99% over the last 15 years. So as it's getting cheaper and cheaper, eventually you can scale it enough that you will change productivity. On the other hand, you've got Japan, China, the US using AI and robotics, which creates infinite people. Now, if you've got infinite people, you kind of break GDP. I call it the economic singularity. You get to some point where GDP doesn't mean anything anymore. What does any of this mean? So if you've got productivity going up because of energy costs, and you've got infinite humans, or what, humans in inverted commas, then that changes everything.
According to Powell, there's still a good chance that we can avoid serious economic repercussions, especially in countries with strong currencies like the US. However, investing remains crucial for anyone who wants to preserve and grow their wealth over time. Traditional asset classes like bonds may not keep pace with inflation, and while popular stock indexes like the S&P 500 might help maintain wealth, they won't necessarily increase it. Powell suggests that cryptocurrencies and technology stocks are the best options, as they are likely to continue outpacing currency debasement. What are your thoughts on the video? Do you agree that AI and other rapidly advancing technologies could be the key to solving the world's massive debt issues? We'd love to hear your opinions in the comments section below. Don't forget to like this video, subscribe to the channel, and turn on post notifications for more content like this. Thanks for watching.